presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come and parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So
well, we appreciate you growling prowling with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. We have a lot to talk about today. Some interesting information from the labor statistics. Oh, man, we've got to look at all the pumps and dumps that are going on. See who did well in earnings, who didn't. Let's take a look right now. We have the composite of about 0.26% at 19,454. You have the Dow Jones Industrial off about 0.12% at 44,727. You have the SPY trading flat right now at 604, up 0.06%. Kind of struggling today, a little bit back and forth there. You have the dollar at 106.31, off about 0.2% right now. You have crude oil surging back up to $70, trading up 2.85%. You have the gold contract about 0.28% to the upside. Copper up 1.67. Silver up 2.17 at the 31.54. Oh boy, what else we got? Tesla coming down a little bit. Man, Zscaler got smoked. You're getting a lot of this. I mean, Red Cat, everything we've been looking at, right? These kind of weird little meme stocks coming out. Now, I'm really going to do some good stuff for Red Cat. I'm going to take a look at this. They have earnings on the 20th. You have the technology chief's departure. You get a new guy in charge of Teal, which is really the big moneymaker potential for Red Cat. Of course, those are doing short-range reconnaissance drones. That can be helpful with what's going on in Ukraine, but in the event that war subsides, which hopefully it does, we're going to have a big border build out under Trump, and that's going to get technologized. Trading off right now, 12.07% at 9.21. Same thing with these other kind of I want to say meme. I think Red Cat has some legs to stand on, unlike things like Archer. Archer's off 7.74%. That was a classic pump and dump as well. Not a lot of substance going on here in a major way. And we're going to talk a little bit about Qubit. Very interesting report came out about Qubit, and a big short position opened due to it. However, first things first, we're going to go over right now to TFNN.com. We're going to go over to the newsletters tab. Now, every Tuesday, we are joined by Basil Chapman. Basil is the author of the Opening Call newsletter. Man, we had a fantastic webinar. Basil put on a fantastic webinar November 14th. I've been talking about it a lot. We've got, a really good amount of people who signed up for all of this, and they have been absolutely loving it. I'm recommending this in a big way. Again, if it is your first time subscribing to any of our newsletters, but in particular the Opening Call newsletter, you can do this risk-free, okay? We have a 30-day money-back guarantee on all first-time subscriptions. If for whatever reason it doesn't work out for you, you can get that money back, but we're betting that it will. Every Tuesday, we're going to go over to our man, Basil Chapman. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing fantastic. Some interesting stuff going on today in the market. I'm curious to see what you're looking at.
This is a really important session. I'll go through one of the some of the factors that I'm looking at here. In my work, I always look for an identifiable low bar and then count each successively peak, alphabetize them sequentially, A, B, C, D, E, F, and G. The objective is to get you from the starting point to a buy signal that hasn't taken out the low, that actually starts to make higher peaks, and that goes to an upgrade, which is called a buy mode. The buy mode designation implies that there should be at least 4 higher peaks. Could go higher, but your objective is to get your 4 higher peaks, and we have other techniques that take over from there. So let's just go to this, and I'll show you something very interesting. At this point on the left side chart, this is the daily chart of the Dow. This is the weekly chart of the Dow, and this is the monthly chart of the Dow. The daily chart has gone to a peak B. I'm anticipating that the high that was made of 44,000, let me just double check the number, 45,071 on the 29th, 3 sessions ago, will be taken out, and that's going to go to a leg C. So as we're getting closer, you can see just here in the corner, this is the daily chart. This was back that October top. They went to a peak D and then just normally made a leg E and a peak E, and we came tumbling down. So I'm anticipating, this is the daily, remember, shorter term daily chart. It looks to me like we are going to go to slightly higher highs. I don't know if it's going to be much higher, but it'll be higher highs to make that leg C, then it makes a peak C, then it goes to a leg D, and at that point I usually assess and say, all right, what are the options now? Are the technicals, that's the 9-period moving average over the 14, still strong? Is the MACD, the moving average convergence divergence, strong? The little gray line there's the relative strength index. The stochastic is at 89%. Over 80% is really good. Over 90% is beautiful, especially if it's flat and holding, which it is right now. The blue line, the on-balance volume, says a little bit toppy, and there was a pullback. The weekly chart, all those technicals that I mentioned are still very positive. Monthly chart. And what I thought was, so we're long, we added to our long today a little bit aggressively this morning. We'll see if that's going to work as a short-term trade to add it to our long positions. So just as I'm finishing this off, I want you to go to, this is almost an embarrassingly easy technique. This green line is when the 9-period moving average goes over the 14-period moving average. Doesn't matter what the time frame is, but when it does that, it goes green. Well, this takes you back to 2009. We were actually fortunate March the 6th of 2009. We bought the Dow Diamonds right at the low, the exact day of the low, and we held them for a long time. But look at this. That green line says that no matter what you heard, whatever there was back in from the period 2009 to the top in 2015, you could ignore because the 9-period moving average just kept you in the trade. And then for 1 month, it went pink, where the 9-period moving average went below the 14. Then it went back to green. And all the news, remember back in 2016, all the different things, the impeachments, whatever it is, market went higher and higher until that top right there. That was the top in February of 2020, and that was a pretty serious decline. For 5 months, the 9-period moving average went pink, went back to green, and then it went pink a little bit here and back to green. This is a monthly chart. So, I mean, have a look at this. I'm embarrassed to show it because I haven't done what the chart shows. Look at the move in this one indicator, the 914.
Yep. From
the low of 2010, the semiconductors stayed green from, what is the price over there? From $11.52. It went all the way to the high of January of 2022, 158, and even then you had to pull back really sharply to go pink. Now it's back to green.
Yeah.
I thought this is an interesting thing to show.
Absolutely. Basil, stay right there. I'm looking forward to hearing what else you have to talk about. Folks, we'll be right back with Basil Chapman right after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. This is a fantastic time to try it out, not only because he's doing a lot of good stuff in the portfolio, but additionally because he just had the subscriber-only webinar Thursday, November 14th. These were sector rotations. This was a great webinar. Again, this is a 30-day money-back guarantee. If for whatever reason it doesn't work out for you, but we're betting that it will. Come check it out. Basil, what are we looking at right now?
So the broker-dealer ETF, which I consider to be really important, IAI is the symbol. My contention has been that the brokerage area really gives you a tremendous amount of information about what's going on in the market besides what's being said. Okay. So this is the monthly chart once again, and you can see how green it is, but you see how it's extended away from the green line?
Yes.
This is last month. This is the month of November, and here we are in December. We haven't yet taken out November's high. So this is saying to me that we've got to start being a little more conservative in our positions, which is why I didn't add any new position right now, rather than just add to a trading position. Right. Because it seems to me, and now we're going to go back to our regular charts. Let me just go back here. It just seems to me that based on the technicals that I use, even though everything's very strong, we should be ready for an overbought rally, mostly because if you look at this monthly chart of the Dow, you can see how far it's extended above the green 9-period moving average. Yes. That just says to me, it doesn't mean to say you're getting, a major sell everything. It just says, go through your indices one at a time, and if you're starting to see this kind of pattern in a number of different sectors, you don't want to be in the same sector, then that's cause for concern. So now I'll show you this chart. Here's the SMHs. You can see how they stalled. This is a semiconductor. I consider them very important because the semis are the oil of the 1900s and the 2000s. Yep. Oil was in everything. So today we have chips in just about everything. Yes. It's just a matter of time before it's in food. But anyway, it's
I love that metric, by the way. I think that's such a great way to look at that. Anyways, sorry. I really like that metric a lot.
You know, it's nice when you can get some kind of an expression that kind of sums up a whole era or a whole sector or a whole something in just a couple of words. And that's really what I think. Think of chips as the oil of the 20th century. And look at this. So they stalled at 283.07 on the 14th of July. pull back sharply. And unlike the Dow, the S&P, and even the IWM, the Russell 2000, which we are still long, we've considered this to be a very important metric in the overall market, the small caps. Look, the semis have just stalled. They're not breaking down, they're not breaking up, but they're not leading. And invariably, they lead the market. So that to me, and you remember I was talking about peak Ds, peak D in the daily. Look, there it is, that fourth highest peak. Peak D in the weekly, there it is, peak D. And yeah, you've got peak D in the monthly. It just says, be a little careful. So that's one thing. The other is, I had considered, and I thought this was really important. I mentioned forever that the money center banks are really important, and they need to be confirming any really good move in the market that goes to highs. It's like Dow theory, but I think of it as a financial Dow theory. Funnily enough, the IYT, which really is Dow theory, made an all-time high just 4 sessions ago. 5 sessions ago, now it's pulling back a little bit. And that's another reason to say, all right, maybe you've got the semis weakening a little bit. You've got the iShares. So as far as I'm concerned, we have Bank of America as part of the XLF. We always have it. Every year we have it, and then we get out of it. We take profits and wait for it to pull back, get back in. And so this is the longest we've had it for. The longest we waited to get back in. And now we're getting a little bit cautious. And one of the reasons is it looks to me like the yields are starting to pull back a little bit. The bonds are starting to move higher for a change. So maybe that is the metric that goes with the financials. But my theme was the XLF was the big heavy banks. The smaller banks, that are really not so small, were the KRE, which is the regional banks. So the KRE, at this particular, if I can find the chart, the KRE, the regional banks, which we've been long, have done very nicely. Not as well as the IWM. My relationship there was the S&P 500 was the leader, and therefore the IWM, the Russell 2000 small caps should play some kind of catch-up, which they've been doing. Yeah. They made new highs. I'm waiting for the regional banks in 2025 to go to test their 78.81 high, and they're trading right now at 66. So they've got a long way to go. So that's how I've been looking at the market, and I've been in for subscribers. I mean, different areas, and I like to have different price ranges so that I can have stocks in the single digits. I can have stocks double digits, triple digits. I like to have a variation because not everybody can buy a $500 stock, even if you're going to buy only a part of it. It's just more fun to have, say, 100 shares of something that's much smaller. So I like to have a balanced portfolio. And the relationship here is that in the swing between the different sectors, the reason why there's been a magnificent bull market for so long is that when there have been corrections, there's been another area to take over the lead, and that's important. And you can see, look, the Apple is at new highs. Microsoft has been stalling for ages. I should say we long Microsoft from 338. It had 468. It's now at 430, and we've considered that it's kind of going sideways. But look, it's had a beautiful move from the 405 level. Today's high is 432. So that's what I mean by this rotation, and that's the reason why I'm not looking for a major correction. I am looking at some kind of a digestive phase coming up fairly soon. Maybe sell, buy the rumor, sell the news with Trump coming. I don't know, whatever it is. I have a timing model, but I prefer to look at my Chapman wave notation, and you can see, you've got the S&P making a leg C yesterday, and it's a peak C today, very close to all-time highs. All it needs to do is to go 53.59. 1 penny above yesterday's high, and it starts leg D. So you can see I'm getting to all these Ds. I'm going to have to reassess everything, but I don't see anything in the cards right now unless it's a geopolitical situation. Here's another thing. Look, this is Raytheon.
Yes.
Look how it's pulled back. Here is LMT. Here is Lockheed Martin. Look how it's pulled back. Gold is pulled back. GD, this is GD. Here it comes. General Dynamics pull back very sharply. Maybe that's good news for the Middle East. I mean, look at oil. Oil's pulled back very sharply. So I like to look at the relationship of certain stocks to the general economy.
Yeah, absolutely fantastic. And I can see, too, at least like kind of fundamentally as well, this getting some kind of breathing room. I am of the belief, this pushes a little bit into December, and you have so many a lot of news in January, right? With the new presidential election, it could be a great time to kind of, take some profits here, digest a little bit, and then reset for what we're going to do next year. Basil, thank you so much for coming on. I appreciate it every time. We can see you tomorrow at 10 a.m. Eastern Time right here on TFNN for your show. And then again, folks, get into the opening call newsletter by Basil Chapman. You get access to all of his subscriber webinars, including the one he did November 14th. Basil, thank you so much.
Thank you, Jacob. Have a good evening.
You too. Take care now. Folks, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. Now, usually on Tuesdays, we are joined by Tim Ord. Unfortunately, he can't make it today, but that's all right. He's going to come back full force on Thursday. We were in the host chat over the break, and I was talking a little bit about VUSI, and I kind of want to cover this a little bit and give my opinions on it. And I thought, hey, it would be great also to have Basil back on to kind of take a look at this stock, see what he's thinking regarding his technicals. Basil, welcome back. We're glad you could join us for a little bit longer.
This call.
Yeah.
And you were talking about it the other day, and I had it on my kind of a watch list a long time ago.
Yeah.
I can't even remember if we had a position in it, because there was one time back in 2020 where this was the whole thing. I think GLW was there. Yeah. Just a whole bunch of stocks in this area, and did fantastically. And then, of course, this hit 32 or 33 back in 2021, and then had a little problem because just recently it hit 85 cents. So I'd love to hear what you were saying. I heard a little bit about it, but yeah, tell me about VUSI.
Yeah, so this is my kind of like feeling on VUSI, right? I remember when I first started filling in for Tom, maybe, a few years back, this company was out there. I love the ideas of augmented reality. I think it's going to have a place in military applications. It clearly has a place in things like OSHA. OSHA, of course, just got or expanded their contract for the M400 smart glasses. And then definitely things like in education and healthcare. And it seems like Vuzix is trying to get into that. I like it, right? It's a little bit shaky for me on the customer side. And what I mean by that is saying I don't know how in demand these augmented reality glasses will be for people like you and I, right? Who kind of just want it to see what it's like and benefit from it. VUSI, I think their tech is good. The implementation of Zoom in these glasses is fantastic, so you can kind of live stream it. Of course, again, on the military application, it's massive. My fear with VUSI right now is that they have had and this is more of a fundamental thing, but they have had some contracting sales for no other reason beyond people just not really buying. Now, I think that gets resolved a little bit. It wasn't by such a large amount, right? You have OSHA expanding the deployment, which is going to be great sales for VUSI. And then you have a six-figure contract with a defense customer for their waveguides, which I think can really help bring back their sales in a meaningful way. And that's kind of the way I'm looking at VUSI. Definitely that run up yesterday was very exuberant. Waiting to see if this has kind of a floor for me personally over a few days to get into it. I'm curious what your charts are saying as well.
So just to go to the fundamental part of it, are these like heavy glasses that you have to wear? I mean, is it?
No, it's very interesting. It's the same kind of deal with like what Ray-Bans was doing with Meta, where these are just kind of like sunglasses, right? And they're now, of course, I would assume probably for like different applications they could be a bit different. But this wearable tech is getting pretty crazy, Basil. I mean, it really is.
Well, yeah, it's like anything else. When it's at first, the innovators, the people who use this, look a little weird.
Absolutely, yes.
And then all of a sudden, it starts with 3 people, then it's 30 people. When it gets to 300 people, everybody just accepts that that's the way it is.
Absolutely.
So that part, that's the reason why I asked, because if it was really weird, it's kind of heavy, it's tough to wear. But if it becomes something that's almost like a fashion item,
yes, and
it's kind of cool, that's when the public comes in. So I like the fact that you've introduced it as there's this whole academic, the military side of it.
Yes.
This is the purely fundamental side where it's functional.
Yeah.
And then there's another side where it's by choice. It's just because it introduces other ways. But on a chart basis, what's really interesting is that the buildup of this weekly chart, I had drawn this in using Chapman methodology, and it says on a time price basis, choosing the left side high. In this case, I've chosen the week of the 3rd of November with a high of 365. And I chose this particular candle right here, the candle of the 31st of, there's a weekly chart, 31st of May, which is at 174 as a midpoint. And then I've got a technique that I use where I look at the left side trough, and I use that to draw in what I call a Chapman wave inside wedge target resistance line. And I make it green dashed on the way up, pink dashed on the way down. So this says, by the end of the month, by the week of the 27th, it's within a week. If the resistance level of 3.24 is hit, there's any time before then, that's the next resistance. There's a really good chance by December, that's this month, there should be a test of 365. Then what I like to do is I go to the daily chart in this particular instance. Weekly chart looks terrible. Once upon a time, 34, then down to 85 cents. So that needs a lot of work. But look at the daily chart. The veracity that I look for is the price above the 9-period moving average, and is the 9 the green in this case because it's above the 14? Is it strong? Well, look how strong it is.
Yeah.
Look at the MACD, how the 9-period differential, this green line, and the 26-period slow moving average. Look at that distance. The histogram, the vertical lines, which give you the space between these moving averages, is still strong, and the relative strength was very strong. It's a little bit weaker, but still pretty good. And the stochastics not at 80%. I'd prefer if it was at 80, it's at 75. And the blue line here, the unbalanced volume, is pulling back a little bit, but still very good.
Yeah.
But in the Chapman wave methodology, you've gone to a peak C. My methodology says if everything is in place, there should be a push towards a leg D, and a leg D would start 1 penny above the 3.000 round number high that was made, the 3.000 round number that was made on the 2nd of December, which just happened to be yesterday.
Yes.
Now, that doesn't give you time, but it does say that if you start to pull back, and I usually have a measured move, so 225, if it closes under 225 in the next day or two, it might take longer. But that spike looks more like it wasn't just news, because that would have been just a spike up and a spike down.
Yes.
This is making higher highs and higher lows except for today, and the technicals are confirming. So that says to me that it's in play, but at this particular point, I wouldn't put a full position in. I would just, I would, have a starter position and look for moves on a pullback that you could add to, and even because it's really a news-related stock, I wouldn't get too carried away. I treat it as part of my portfolio, part of a small part of my portfolio, and I'd have a measure. But this is something you can slowly build up a little position and then just put it aside and say, I'm not going to follow it. Wake me up when it hits 4.5 or something like that. I mean, that's the best way to look at it.
Absolutely. I'm right there with you, Basil. Basil, thank you so much for coming back on for this segment. I really appreciate it.
Thank you very much, Jacob.
We'll see you tomorrow at 10 a.m. Okay, Basil?
Yes.
Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter.
a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. I was joined by Basil for the past 3 segments. If you missed any of those, I would really recommend coming to our YouTube channel at the end of programming. Our producer is hard at work getting those clips cut out and uploaded. If you decide that you want to do that, please consider giving the video a like and our channel a subscribe. Helps us all out immensely. We want to continue to bring you just fantastic, really stock analysis, you know. And if you want some more of that and really more personalized to all of the traders that we have come on, really going to recommend here the opening call newsletter by Basil Chapman. Again, you get it. You've heard the spiel today. You want to get this because you have that subscriber webinar, and it was fantastic insight. Basil, again, thank you so much. Yeah, take a look at VUSI. A lot of people talking about it as well. First, I want to say to X in the YouTube chat, yeah, I mean, if I can do, you know, some weird DCF stuff and everything like that, if you want to look at more value stocks, I think right now, kind of the way that I'm looking at stuff is there is just so much money getting pumped into this market. I mean, look at all the, you know, I mean, good Lord, we're looking at Red Cat. I mean, you have, what was the Sato today? They had their big credo. I mean, these things were just getting pumped beyond comprehension. This is up 46.95%. We can take a little bit of a look at them. But, you know, there's some money to be made with that. I do kind of see a little bit of a correction going into January. I think there's a lot of stuff that can kind of contribute to that, and at least give it some kind of like nexus point for it to, you know, manifest around. I think the job numbers were still somewhat strong. I think inflation is somewhat persistent. I think Trump, in a lot of different ways, is an inflationary president. That's not always a bad thing, but, you know, certainly conversations around tariffs can be somewhat of an issue. And so I think there's a lot of argument to be made that you might get some kind of forced contraction, like let's say, you know, God forbid that the Fed raises rates or something like that, you know. And I think as well, you know, there's so much money being made right now and things are getting pumped so high that something like a presidential election can be, you know, kind of like a trigger. And I don't think it's a long-term thing. And I think it's probably not going to be a massive crash and, you know, we're all going to go back to the Middle Ages or something like that. But I could definitely see a correction in the beginning of next year. But you're just seeing this massive exuberance right now and people just pumping in money. And that's kind of why I haven't looked too long at, you know, any kind of value stocks, but X totally. And then to what Dan was saying in the den, yeah, 100%. So he posted this. This was from VUSI. This is November 9th, right? Quote, despite the delays of certain enterprise and OEM customer orders, which resulted in our third quarter sales falling short of expectations, we do see underlying momentum across both our enterprise and OEM businesses. Definitely, I think for me, the one that was kind of weird was just how low, I believe it was like engineering consultation fell, which, you know, is fine. They have okay cash, right? I mean, a little bit less than it was in December. They don't really have any debt, which is super solid. I love that in companies. And no, I mean, I believe in the AR technology for those kind of industries that I laid out. I mean, no doubt, you know, I said it last time, but if you're a nurse, you know, you connect these glasses to one big kind of system, you know, and you can look at your patient and understood what they've taken earlier. Is there anything that you're about to give them that might interact negatively with this. I mean, going into things like OSHA, I mean, no doubt that makes sense, right? Into education, it's huge if you're doing hands-on education, something like welding or whatever it may be, right? And of course, something like that doesn't necessarily blow it up by any means, but it gives it a good foundation. And I think the military capabilities, usually when you have companies that are making things for the military, that's fine and it's great because you have a consistent kind of cash flow over the term of the contract and stuff like that. But in my opinion, AR for the military is like the future. This is how you kind of gain that edge for your soldier, especially when you have a bunch of near peers, right? I mean, you think about it, one of the things they do now, if you're doing some kind of larger assault, which isn't usually what the U.S. gets into, right? You have smaller teams that kind of do it, and maybe they are augmented by local forces. But like in Iraq and stuff like that, or some early phases of Afghanistan, they would use massive IR lasers to point at the location that people needed to go to. And that's fine, but if you're doing some near peer kind of issue, they can see the IR as well. And so you kind of talk about these realms of using like visors, and these visors are connected to some kind of network, and you can see in the distance, some arrow. Anyways, I'm getting sci-fi with it, but no doubt, that's where these kind of things can go, and equipping out our individual soldiers with stuff like that, I mean, makes us, extraordinarily potent compared to what else is going on. And again, I think this is great, right? I mean, OSHA expanded contract is fantastic. I mean, the stuff works. People like it. Defense contractor, fantastic. Yeah. I mean, the sales and engineering services, I would like to see kind of why that was so low. I can get sales of products, going from 1.37 in 23 to 988, right? You can have, sometimes I'm just a little bit weirded out on the engineering service. But overall, I like the fundamental concept of what they're doing, and I think there is a massive need for it. It's not just some kind of sham company in any capacity, right? Again, okay cash, kind of contracting a little bit, but, they don't have any debt in a major way, which is very nice. So, anyways, that's kind of my thought on Vuzi. I want to talk a little bit about Qubit here. Trading up 2.05% at 623. They're doing the thin film lithium niobate. This blew up on a lot of different news. One, that they are getting a contract from some company in Asia. And then also from a university that apparently turned out to be University of Texas, right? So some weird stuff kind of going on with Qubit is you actually had a big short position get taken out here. I'm gonna pull this over here. Why is that coming up? Okay. This is from Iceberg Research, and not super familiar with these guys. They're short sellers and stuff like that. Do a kind of a Hindenburg approach, right, where you take a short position out and then you release a major kind of hit piece on it, right? One of the big things this is running on, right, is Qubit becoming a foundry. Okay, so making these kind of chips, you can see right here, this is on X, we reinitiate our quantum computing short. They call it a permascam. These guys went out and researched the area where they said that the fabrication existed and where they were going to, start building out these chips. And it was like a rented out office building. Absolutely not what you need to do chip fabrication. Additionally, University of Texas came out and said that it was extraordinarily small order just for research purposes, right? So that's kind of, it's kind of interesting. I mean, the fabrication thing is a major issue. I'm going to do some more research on it to see if that's actually what's going on and what they're saying. But if this building, and they have it listed, QCI Fab 2050E ASU Circle Suite, okay? I'll give you the thing if you want. You can email me and I'll send you the link. But yeah, you can look on Google Earth and it's just kind of an office park. That can be a significant problem if that's the case, and that's what all these people are banking on. They said they have it up and running by Q1 of 25, like our Q1 of 25. And it doesn't seem like there's anything there to do it. Crazy if true. Seriously, you want this article, I'll send it to you. Just email me, jacob@tfnn.com. Trading up 1.88% right now, $6.22, high of $9.20. A lot of exuberance, folks. Stay right there, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Jacob Shoup, you're watching the Tom O'Brien Show. We have a short segment here. I'm loving what everyone's saying here on YouTube and the Den. Yeah, boozy changing funds, owning stock. I think, being around for a while, part of me is like, the AR is just so new and the application just didn't make any sense. The same thing with the metaverse, right? Like, metaverse is a little bit different with these like VR goggles because Meta is the one producing it and they have so much money to be able to kind of add these out. But I think like when my little cousin is my age, people will be using VR, consistently, right? And so I wonder if it's the same thing with the AR. And, there's some like news articles as well. The Pentagon says that like the augmented reality goggles make the soldiers less lethal. I mean, they could be bulky and stuff like that. But I mean, you think about it as well. I mean, you could do heads up displays on certain things. We'll see what happens with it. I'm not really married to Vuzi in any capacity whatsoever. And then, to everyone who emailed me about Qubit, I will send you those emails right at the end of the day. Let's talk about Ripple a tad. I'm probably going to do some more tomorrow when I have more time. But everyone is getting hyped on Ripple beyond belief, right? Everyone's saying, like, this is the new thing. This is running. This is where the ISO 2022 is going to really start playing. And I mean, a lot of big people have been talking at least about Ripple infrastructure and stuff like that. Yeah, JP Morgan. I will send this one to you guys too if you want. This is JP Morgan releasing something on, just basically ISO standards, right? So you have Finality, which is the they're calling a central bank digital currency. That's primarily for delivery versus payment capabilities. Let me just pull this thing over. And then this is Ripple, which is cross-border payment infrastructure. I want to say, I'm going to talk about this more tomorrow. This run-up in Ripple, I do not believe has anything to do with this. I think this is Ethereum, Bitcoin get pumped up, and now you're getting the other ones that are going to get pumped as well. There are so many fake ads going on right now for Ripple that I think this is a pump and dump in the short term. We'll talk more tomorrow. Thanks so much for joining me, folks.
Building wealth trading in